Good, YouTube. Welcome back. DubDigital, crypto news, macro trends. Today, we're going to do a Wanchain update. Shout out to my Wanchain homies. I'm going to keep you up to date with Wanchain's price movement because I believe it's entering more or less what looks like an exponential phase. This is TradingView, guys, and this is the chart that I had done a couple days ago on Wanchain. And I know a lot of you guys appreciate it, so I'm gonna keep you guys up to date on this one because there's a lot of people looking for help with the TA. So that's what I'm here for. So let's get into it. Right here, you'll look at the 4-hour Wanchain versus BTC price action. Okay, and I have some circles highlighted here for what I believe are important periods in time that indicate reversals. But let's zoom in here and look at what's currently happening. So per my last video, guys, I mentioned that Wanchain was breaking out of a ascending triangle. It was coiling up, right? So guys, there's patterns within patterns when it comes to charting. There's also fractals, which are structures within structures. It gets pretty wild. So a lot of this stuff, guys, is being able to recognize what are the candlesticks showing you, what kind of formations are they developing, and as we follow a trend, see how our predictions based off the geometry of the triangles. Alright guys, so this is zoomed up, and per my last video on Wanchain technical analysis, I had stated that Wanchain was currently consolidating in an ascending triangle, coiling up, and volume was dipping down, as we can see here. Whenever price pretty much consolidates, stays the same, or pretty much trades within a range of a pretty much consolidating triangle, and volume is dipping down, we know that a big move is coming. When price movement is consolidating within a ascending triangle, we know with dropping volume, we know that the asset is pretty much trading range bound, which means that the buy and the sell extremes are getting closer and closer together for a big price movement, either to the upside or the downside. And the reason, guys, I'm getting so aggressive at this, what I believe is a market bottom, is because the chance of it dipping down is less great than the chance of it shooting up. I take those odds. That's what we call asymmetric risk in investing, guys. This is asymmetric risk, guys. Yeah, look, let's keep it simple. Always keep it simple when it comes to investing. Don't complicate it. If you go to TradingView, always make sure to check out the macro picture first, right? This is the all tab. It pretty much gives you the history of the asset over its entire life, at least on that exchange. Remember where we used to be, guys. Wanchain team. Remember where you used to be. You used to be up here with the giants, swinging with the giants. At one point, people were ecstatic to be buying at these prices because we thought it was going to be a new paradigm. But look, the grand scheme of things, guys, even if your patterns aren't working, this is not financial advice. Do your own research. Y'all are adults. But even if our patterns don't play out the way we thought it would, what's the potential downside? 60%? What's the potential upside? Almost 3,000%. I'm not a betting man, but I am an investing man. And I'll take those odds any day of the week. So we jump back into the 4-hour here. What I want to show you guys is very important. Alright? So pretty much, in my last video, I drew these trend lines, the bottom trend line, so you can see that the asset keeps touching these trend lines and respecting it, not breaking below. That's indicative. And if you check that here, my cursor here, dotted line, is horizontal. It's perfectly horizontal. If we were in a downtrending market, the black line that I've drawn here would be crossing down through. We are not. You obviously see an inflection point right here that the trend starts going up, as I indicated in my last video. I made a prediction that the trend line was no longer continuing on its current path and it was increasing in severity, the start of a parabola. This was a gain of approximately 30%. With that said, we had a correction, as I predicted in my last video, of about 13%. And it touched down to confirm this trend line here, right? We had some underperformance when there was like a huge sell-off back in the July 20th time frame. 30%. We ranged in that underperformance for approximately 13 days, ended in an ascending triangle, which shot up about 30% to the upside, dropped 15 back into the reload zone that we show. Now guys, I pick up these reload zones based off of areas of support that have not been confirmed. This is a confirmation right here of confirmation of support. If you zoom in here, look, the last point of touch was right at the line, the support line that I drew. And then it bounced off with increasing volume, as we can see right there. Charting is technical. Nothing goes up in a straight line. You have to look at areas where the market had sticking points before. Chances are there'll be sticking points again because markets have memory, guys. Everyone's looking at the same chart. And no matter what you think's gonna happen, no matter what news happens, everyone knows that at this point there was significant resistance. And this ultimately was a resistance support flip. So now the area we couldn't break out of should, and you can see by the volume which is confirming this, act as strong support that most likely it will not break below, because this is an area where everyone in the market has agreed that this asset is valuable at this point. Anything under this point's a deal. The problem, guys, with retail investors, people who aren't used to investing or in crypto, equities, or anything, they're not used to the formula where you use money to make money. It never feels good to invest in an unappreciated asset. The market basically tells you that the asset was underappreciated after it's gone, after your opportunity is gone. So your feelings are working against you always. People have more confidence that the asset's going to go up in price once they see it happen. But as you get more confidence and safety from seeing the price play out, all your opportunity goes away. And if you buy at severely elevated prices, that opportunity might actually turn into a liability. You might actually lose money. And that's not what we're going for. At least not me. I don't know about y'all. Alright, so let's talk about this next breakout pattern here. Well, Wanchain's doing it. From the cycle bottom, which was in May 2020, to the current price action, Wanchain has risen 130%. I'd say that is phenomenal returns. Because Wanchain was like spit on. They were like kicked on the ground, left in a dark alley, had to walk home. Some dude took his shoes, tied the shoelaces up and threw it on the power line. That's what happened to Wanchain. We can look at what I believe will be the future trend line, which has increased in steepness. Again, playing out to my parabola theory. I think there's about to be a bigger move in Wanchain. Which direction? That's the part sometimes I get surprised at. But with this increase in volume, pretty much consistent and larger than we've ever seen for the last year or so, and rising prices, so prices rising with volume, that's consistent with positive price action. That means not just big whales are pushing it up. That means a volume of people see the same thing on Wanchain, acting a way to take advantage of the opportunity, right? So this thing's coiling. I'm expecting it to do something like this. This is the reality of the situation. Look, we're stuck in between one. We're stuck in between a reload zone and we're stuck in between a resistance area. So while this coiling could either do one of two things, the volume could keep building into this move and it keeps moving up and up and up, even into the resistance area, and shoots above violently. That is a move of approximately, that's a move about 30%. It's not going to cut, this is not going to cut through this area like butter. At least I don't expect so. That's why I'm showing that perhaps the price may dip down. And let me jump back in the 4-hour. The price may dump down back to confirm the top of this reload zone. Now that's a higher high and a higher low. That would invalidate our triangle. However, if it did stay within a triangle, and this support line is not as heavy as I might think it would be, because, you know, guys, this is still somewhat the disbelief phase. We got a lot of people who are just trying to get their money back. They're not looking at making money. They're looking at saving their money, right? But if that's not the case, I expect Wanchain to continue in this consolidation upwards in this triangle. A big volume move to break out and maybe pushes through this resistance line like nothing. It's a lot of ifs, ands, and buts and candy and nuts, guys. But, like, you know, you gotta, in order to be a good investor, you have to understand how your trade can go badly too. And you need to mitigate for that as well and make a plan for that as well. In a bullish scenario, what you're going to do. And also in a bearish scenario, what you're going to do. If the price dropped back down to retest this top of this reload zone right here, you know, focusing on the negative and the price went down, maybe this would be your opportunity to reload a little more, make that bag a little heavier. So when it does, inevitably what I feel, not financial advice, do your own research, y'all are adults, but inevitably I feel eventually shoots out of this resistance zone, you'll have a heavier bag. Because trading is all about keeping your profits more than making profits, man. A lot of people, and the majority of people, don't make any profits. They lose profits. And the profitable traders in the business are the ones taking those profits. So you got to be smarter. And you have to disassociate yourself from that ego that wants to tell you to fall in love with a coin. It's okay to let something go. If it comes back to you, it means that it's for you. You know what I'm saying? So look, the best case scenario on a pullback would be to be denied at this resistance level here, drop down and stop and be caught at this trend line of the ascending triangle. If we did break down below, we can fall down to about right there. And that's something I'd be interested in maybe, you know, looking and accumulating as well. Let's throw another indicator in here for you so you could better understand what's really going on, because like I said, price isn't everything, yo. Alright, we got the ADL. Advanced decline line right here. This is going to tell us how many people are actually participating in the move, and it's also going to support our thesis that we believe that this isn't just a pump and dump by a whale or a few whales. This is a large market move together. Like I've shown you, this rising triangle is very steep, indicating a lot of price action, which is verified by the volume increase. Look how low it was before, and look how extreme it is now. Also, we look at the advanced decline line, which is the amount of unique buyers and sellers participating on this exchange for this asset, rising in congruence with the volume and with the price. Right here, we got the HV, or the historic volatility. Is the move of this price typical for this asset as a percent of volatility? And then making it in a graphical representation to show you that right here, this was a huge spike, untypical, typical. So basically, it's also giving us another data point to say, does this happen occasionally in this asset's history, or is this an anomaly? Yes, in fact, this thing has doubled and or tripled the amount of volatility in its history before, in 2019, mind you. However, looking at the historical volatility, you can see that it's consistently went down over time. You can also try and see what the graphic is telling us. We can also chart these indicators, guys, on the HV, the historical volatility, and look at it as a pattern, just like we look at the price, right? So I just drew top and bottom trend lines here. You can see that it's constricting in a triangle pattern. And what do we know about triangle patterns, guys? While a price or volatility or whatever you're measuring on a chart constricts into this triangle, it's indicative of a eventual price movement, large, either up or down. And again, we look at the volatility here over the life of Wanchain. It's doing the same thing. So as the volatility has decreased, the volume has decreased. And as the volumes decrease, the price is going up. We had nothing of the volume that we did back here. We have a fraction of it just barely occurring. And look what's happening to the price already. This is pretty wild. This tells me that the amount of money being thrown into these markets are just bigger per participant in general. So just want to throw this in here for you guys. I'm DubDigital, crypto news, macro trends. Shout out to my Wanchain homies. Like, comment, subscribe. Talk to y'all later. Peace.